So, what if I told you there's an ETF that doesn't just pay you monthly, it pays you weekly? Yes, you heard that right. Every single week. We're talking about the ULT ETF, the YieldMax TSLA Option Income Strategy ETF. And let me tell you, this isn't your average, boring, slow churning dividend ETF. This one's built different. It's fast, it's aggressive, and it's designed to maximize income, not just grow slowly over time. Stick around, because we're going deep into how ULTY works, how much it pays, and whether it really deserves the crown as the weekly dividend king. Let's start with the basics. ULTY is part of the YieldMax family of ETFs, and if you've been watching the ETF world recently, you already know YieldMax is blowing up. Why? Because their ETFs are generating monster yields using a strategy called synthetic covered calls, without you having to do the complicated option stuff yourself. Now here's what's crazy. ULTY is tied to Tesla stock, but it doesn't actually own Tesla shares. Wait, what? Yeah. ULTY uses a synthetic strategy that mimics the price movements of Tesla through swaps and derivatives, and then layers on a covered call income strategy. It's designed to deliver high income, not Tesla's growth. In fact, it sacrifices some of that growth to give you income up front, and it pays it out, not monthly, but every week. That's 52 paychecks a year. Now let's talk about yield. As of now, ULTI is pushing out a trailing 12-month yield over 60%. 60%. Put that in perspective. If you put $10,000 into ULTI, you could potentially be looking at over $6,000 in annual income. That's about $115 per week. At $20,000 invested, that's about $230 per week. Almost like getting a small part-time paycheck just for holding the ETF. But here's the part most investors miss. That insane yield isn't guaranteed, and it's tied to options premiums, which fluctuate based on Tesla's volatility. The crazier Tesla acts, the fatter your paycheck. So what's the trade-off? Well, you don't get much growth. ULTI isn't meant to compound like VOO or SCHD. It's an income-focused beast, not a long-term compounding machine. And because it doesn't own Tesla stock directly, if Tesla goes to the moon, you're not going with it. You're just collecting the income while others ride the price action. But is that a bad thing? Not necessarily, because ULTI isn't trying to grow your net worth. It's trying to fund your life. And in today's economy where inflation is draining your wallet, where rent is eating your paycheck, and interest rates are punishing growth stocks, regular income is king. Let's break it down with an example. Imagine you're a 30-year-old investor looking to build an income stream. You put $25,000 into ULTY. With a 60% annualized yield, you'd be making roughly $15,000 per year in distributions, or $288 per week. That's enough to cover your groceries, your gas, and still leave you some cash for a night out. And the best part? It's passive. You don't need to trade options. You don't need to track earnings. You just hold the ETF, and the yield shows up in your account. Every week. And this is where ULT flips the script on traditional ETFs. Most ETFs are designed to build wealth over decades. ULTI is designed to pay you now. You could argue that it's not really a growth tool, like it's a cash flow machine. But of course, there are risks. First, ULTI's yield depends on Tesla's volatility. If Tesla calms down, or if options premiums drop, your yield could shrink. Second, the share price of ULTY isn't stable. It will likely trend down slowly over time because of how the call options are structured. That means while you're collecting cash, your principal might slowly erode. So it's not a buy and forget ETF. It's more like a tactical income tool. You use it when you want to maximize cash, not long-term appreciation. Now let's compare ULTI to some of the more traditional income ETFs. Take GP, for example. It pays around 7 to 9% and is known for its lower volatility. Or QYLD, which tracks the NASDAQ 100 and generates about 11 to 12% yield using a similar option strategy. And then there's MSTY, another YieldMax ETF tied to MicroStrategy. And yeah, we already covered that one. But ULTI's yield, it dwarfs all of these. We're talking 5 to 8 times higher payouts. So if your goal is pure income and you're okay with the trade-offs, ULTY might be the most aggressive cash generator in the market right now. Let's quickly hit the timeline. ULTY launched recently, late 2023. It's relatively new, so there's limited long-term data. But in its short time, it's already gained traction, especially among retail investors and income-focused YouTubers. People love the idea of weekly paychecks, especially in this uncertain economy. And look, let's be real. Most people don't want to wait until they're 65 to touch their investments. They want income today. They want their money to work now, not just grow in some far-off retirement account. ULTY gives you that. It's not for everyone. But for the investor who wants cash flow, maybe to supplement their job, or even to start replacing parts of their paycheck, ULTY could be a game changer. Let's say you had $50,000 just sitting in a savings account, earning 1% interest. That's $500 a year. Move that into ULTY, and suddenly you're looking at $30,000 in annual income. That's $576 a week. That's powerful. Of course, you're trading safety for income, but for some people, that's worth it. And here's the smart play. You don't have to go all in. Maybe you use ULTY as just one piece of your income portfolio. Pair it with something safer like JEPI or even SCHD. That way, you're balancing growth, safety, and raw income. But ULTY, it's like the offensive player on your income team, going for big gains while the others handle stability. One last point, taxes. Since ULTI's distributions are considered ordinary income, you'll want to track your tax liability. Depending on your tax bracket, that juicy yield might come with a higher bill. That's not a flaw, just something to plan around. But all in all, ULTY is offering something that very few ETFs do. Weekly income, big yield, simple strategy, no options trading, no complicated moves. Just high-frequency income right into your account. So, is ULTY the weekly dividend king? For now, yeah, it just might be. If you're chasing income, if you're done with slow growth, if you want your money to pay you now, not 30 years from now, then ULTY belongs on your radar. Just don't forget the risks. Watch it, understand it, and use it as a tool, not a one-size-fits-all solution. And hey, if you enjoyed this breakdown, do me a favor. Tap that like button, subscribe to Money Stick Unfiltered, and join me every week as we break down the most exciting and sometimes overlooked ETFs in the game. Catch you in the next one.